company Veranda Learning Solutions has announced its earnings for the third quarter, reporting a loss of 203 crores on a consolidated basis compared to a loss of 16.71 crores in the same period last year. Its total income stood at 98.3 crores, up about 17% over the previous year. Now, the company said these earnings were impacted by a combination of academic and market factors, and it is now targeting revenues of more than 500 crores for this financial year. For more on this, joining me now is Suresh Kalpathi, the ED and Chairman of Veranda Learning Solutions. Suresh, thanks very much for your time here on CNBC-TV18. Widening losses and just a modest 17% increase in revenues. What were the factors, tell us, that impacted your earnings in the quarter, and what sort of improvement do you see going ahead?
I think a couple of factors. First is from a business operations perspective. On our commerce coaching segment, there has been a change in the CA academic calendar, which has moved from 2 exams a year to 3 exams a year. So the system is sort of settling down. The student base is also settling down to the new calendar of events. So that's one. The second one, specific to our government test prep, there has been no notifications in most of the southern states in India. And as you would know, the numbers for the test prep segment for government significantly ramps up when there is a notification for employment in that segment. The third, of course, is a one-time write-off that we took. This is predominantly non-cash intangible assets that had come in as part of provisioning for the acquisitions we have done. So we have taken this quarter as a one-time, almost all of which is non-cash and intangible assets that we have amortized and accelerated their depreciation.
Well, you've also scaled down your revenue target for the current financial year, because earlier you were told at 600 crores, which you've now brought down to 500 crores. What is the reason for this?
I think it's essentially only because the fourth quarter is yet to sort of go through completely. And we are not sure of further notifications that could come, or for how the CA pass percentages are going to turn out when the results come out during the second half of this month. If those results come out as we expect, as it has been last year, and the notifications come, this revenue could significantly ramp up from 500. So what we had indicated is, assuming the worst case picture, we expect our revenues to still cross 500 crores for the year, and our pro forma pre-adjusted EBITDA to still cross about 130 crores for FY25.
Well, all right. In that case, how do you see the EBITDA margins evolving in the coming quarters as this one-time adjustment normalizes? Also, how many additional schools are you looking to manage, colleges you will tie up with, and new product offerings that you have in the coming months?
Currently, we manage about 5 K-12 schools and 2 international schools. We expect to tie up another 5 more schools during this quarter, Q4. Going forward, over the next 3-4 years, our plan is to increase the base of managed schools to over 100 schools all of India. As we speak, we have a pipeline of close to 40 schools that we have already looked at, have shortlisted for signing MOUs and start work. As far as our EBITDA margins are concerned, we expect our EBITDA margins to start settling around 25-26% on a consolidated basis for all the segments that we operate in.
Well, Veranda had recently announced 2 acquisitions, the BB Virtuals one and the Navkar Digital Institute. Under your Veranda 2.0 strategy, you're talking about focusing on integrating past acquisitions and driving organic growth. So given the recent restructuring and impairment, are we going to see a more selective approach to your M&A going forward?
As part of Veranda 1.0, it was largely built through acquisitions. And with Navkar and Banwar that we have just announced, we have sort of come to the end of our acquisition cycle. We pretty much have everything that we need to build what we call as the fabric of Veranda. Going forward, our focus will be predominantly on 4 segments. The first is the academic segment, where we will focus on K-12 schools and international schools that we will manage. The second one is commerce coaching under the larger brand of JK Shah classes, which will include Banwar, Tapasya, Logic, and Navkar. And that's a significantly large segment for us, where we expect the EBITDA for FY25 pro forma to be over 110 crores just for that segment alone. The third segment for us is government test prep, where we are very strong in the south of India under the brand of Veranda Race. That would be our third focus area. The fourth one, of course, is what we internally call as occasional, which is largely B2C, B2B training for technology-related programs. and for higher ed programs in combinations with leading universities like IITs, IIMs in India, and Illinois Institute of Tech, Purdue, and Cambridge outside of India. So those are going to be our 4 key areas of focus. And you will see going forward that we will start reporting very strong numbers across these 4 sectors, all of which has come from acquisitions. And going forward, all of our growth will come from organic growth within these 4 identified sectors.
Well, finally, Suresh, in December, the company had announced raising about 250 crores through a preferential issue. Beyond this, are you planning any other fundraising, either through debt or equity?
Currently, we have about 450 crores of consolidated debt that we have, largely funded through Bearings credit. We do not need further funds to build out our business. As far as our ability to be able to deleverage, that will be a constant focus for the company to deleverage, because quite a bit of our monies that we generate from our profits is going into servicing this debt and leaves not so much for us to build our business organically. So the idea would be to continue to build our operating margins significantly and as quickly as possible deleverage the company and become debt-free.
All right, Suresh, that's all the time we have. Thank you very much for joining us today.
Thank you so much.